Hi, this is James Shrug with Westpac London's end of day report for Monday, April the 16th. It was a bit of a bounce. There was a bounce in European markets today, excluding in financial stocks, reflecting the huge losses that we'd seen last week with industrial stocks and cyclical stocks and sort of safe haven stocks tending to recover a little bit as investors decided perhaps that the sell-off had been overdone. There was a bit of a wobble when a Swiss transport company reported disappointing results, which suggested that maybe trade within Europe was diminishing even faster than had been anticipated, but that was sort of countered by European trade figures, which showed, although they showed a lower trade surplus in the month of February, they showed imports and exports both posting pretty decent gains. The US data flow today was particularly interesting. We saw a very solid retail sales report for March. Sales are up 0.8%. Auto sales are up against expectations of a fall based on industry data. Core retailing, excluding autos and gasoline, which was pushed up by prices, rose 0.7%, up from 0.5% in February and a 1% rise back in January. So core retailing right through the first quarter actually has done very well. Now, part of that could be milder than usual weather conditions, encouraging people to get out and about and to buy stuff, in which case you might see some pull forward from Q2 figures. We might see weaker sales in the months to come. We don't know yet, but certainly that has been one continuing bright spot in the US data flow, which has started to turn south on other measures. And those today include the New York Fed Factory Index, which fell very sharply from 20 to 7, below even Westpac's bottom of the market range 10 forecast. So some of the detail was soft in that too, particularly including a 12-point slump in shipments. Actually, that follows though weaker Dallas, Kansas City and Richmond Fed factory surveys for March, which suggests that sort of from the latter half of March onwards, that factory bosses have started to get a little bit more concerned about the economy. The New York Fed and also the Philly Fed surveys, which were conducted in early March, and actually some responses from late February apparently too, didn't capture that negative sentiment that was captured by the subsequent Fed factory surveys in other regions, but they certainly did in the, New York certainly did in the April survey put out today. Also, the National Association of Home Builders Market Index posted its first fall since September last year, also weaker than Westpac's bottom of the range forecast, fell from 28 to 25. Another piece of evidence pointing to somewhat of a loss of momentum in the apparently very strong economic performance that we've seen across a range of indicators until recently in the US. So just like in 2010 and 2011, in the early part of those years, when we saw some decent looking numbers, but it didn't last, it looks like that could possibly be starting to be the case for 2012 as well. That's the main point, another main point, data points to note today. In terms of markets, Europe closed higher with the FTSE up 0.25%, French market up 0.5%, and the Germans up almost 2/3%. The exception was Spain, down 0.6% today. Just one other thing too, there are a bit of a few catfights emerging in Europe. Another ECB council member has said that the first ECB council member who hinted that maybe the ECB's bond buying program might be fired up again in support of Spanish financial markets. The second guy said that that was an unfortunate communication from his colleague. So there seems to be a wide range of opinions on the ECB Council about that. We don't doubt that, but they're going vocal about it, which is pretty unusual, really. I'm sure Draghi, the ECB president, will say that the only person to listen to is him when he next speaks. Also within French politics, they're trying to, Sarkozy is now on board with this idea of getting the ECB to have a growth mandate, which would be over the Germans' dead bodies, I suspect. Okay, so in terms of the US, the Dow, lunchtime, up 0.5%. Now, tech stocks have been falling away, and the last week, and they continue to fall away today. So the Nasdaq's actually down 0.9% at the moment. The broader S&P is down 0.2%. So the Dow, which doesn't have a high concentration of tech stocks in it, hasn't suffered from the likes of Google and so on, and Apple, who've seen their share prices fall away today again. In terms of commodity markets today, we've got mostly losses. Crude oil down 0.57% at $102.24 a barrel. Gold's down actually the same amount, 0.57, at $1,651 an ounce, and copper's off 0.4% today. The Aussie dollar's a bit weaker, 1.034 against the US dollar. And we've got the minutes to the Reserve Bank's board meeting, the April board meeting, coming up in the Australian session today, which we'll go into perhaps a bit more detail that in terms of how the Reserve Bank's thinking has changed, particularly in regard to the domestic economy, which, according to the statement they issued 2 weeks ago, wasn't meeting their expectations. Okay, I'll leave it there. Back tomorrow.